everybody. I'm Peter Grant with Zaner Metals in Denver. This is This Week in Metals. This is Peter Thomas. How are you?
I'm all good, man. I'm, 30 below wind chill factor, wearing a sweatshirt, out there shoveling around my car with 2 feet of snow. It's been a wonderful
Yeah,
day.
we just got a couple inches here in Denver, but it was cold earlier in early last week for sure.
Oh yeah, we've had a rough week, and you know what? Our hearts and thoughts go out to our friends in Texas too.
Yeah, I got family
We
down
have we
there.
know
They're
so many
all
people
good
down
and
there that are suffering.
right,
Yeah,
right.
yeah.
Hey, exciting week in the metals
Oh,
as usual. We say
as
that every
usual,
week,
that's it.
right?
Never a dull moment in the metals, folks. Hey, you want to perk up your week? Come on in. The water's fine.
Right. So gold was down about 2.25%
Yeah,
last week. It actually set a 7-month low on Friday at
right.
1760.62. Interesting though, it set that low and then rallied back into the range. Actually closed
I
higher
saw
on the
that.
day on Friday, so a little bit of a hook reversal maybe. Um,
Just wondering technically if what it held because they just put the brakes on it there and it came back. I thought that was interesting.
yeah, it broke support by a couple of bucks,
Right.
but
Took out
not.
some stops.
Yeah, and then kind of firmed up a bit. I think the path of least resistance is still lower in gold. It's just been a dog lately, and that's largely attributable to optimism.
Yeah,
Optimism about the Biden stimulus plan, $1.9 trillion. They're saying that probably
which
won't,
keeps
happen
going
till
up, by the way.
March.
Yeah.
Yeah, and kind of a general economic recovery as we get broader distribution of the COVID vaccines and people start getting back to work and so forth.
And
Uh,
central banks selling. We've seen a little bit of that. And also we've seen some ETFs doing some dumping too.
yeah, a lot of dumping in the gold ETF
Right.
as well. So again, that's again, I think that is reflective of investors finding greener pastures in stocks and cryptos and whatever else you wanna
Yeah,
say.
yeah. I mean, when one goes down, the other goes up. I mean, there's been a lot of pressure on the yellow metal, and
So yeah, that you raise a good point. So one of the
Mhm.
things that's been going on, we've seen higher yields. The 10-year closed last
Yeah,
week at 1.34%.
yeah, I saw
It
that.
was about a 1-year high in the 10-year
Right.
yield. The 30-year closed at 2.134%. That's a little bit more than a 1-year high in the 30-year. And so, people started talking about, oh, the rally in the dollar. And so it did rally a little
It
bit,
did a little bit.
early in the
Yeah.
week. But I'll tell you, and I've been saying it for months, I am not impressed with this rally in the dollar. So,
Yeah.
even with yields going higher, it's acting like a dog. So I think
Tough call. I mean, some of the bigger players. We saw Glencore came in with a $1.9 billion loss, basically attributable to some problems they've had in Africa. They have 145,000 employees and probably one of the biggest firms out there. And I know about. I do not know Glassenberg, but he runs a tight ship over there, and they've had bigger losses before. I got a feeling that what people forget is that all the metal in the ground, everything from cobalt to copper to gold to silver to platinum, palladium, if they're not digging it out because of COVID and it's been going up, their net asset base is going higher. They're just not digging it out. So I don't think that's a big deal to put pressure on gold. And Goldman is now, I guess, 100% ETF owner of the Perth Mint's offering. So that got firmed up. That's another 500 million of gold going into Goldman. So there's some big players on each side of this that are going up and down, which has been making it exciting. Hey, we got some movement here, and
yeah.
things go up and they go down. And I mean, when they go down, you average down, right? I mean, that's the bottom line.
Right, right. And we've been talking for a while now that maybe gold does need to go a little bit lower to
Yeah,
draw
yeah,
in the Asian physical buyers,
right.
and that theme I think continues to play out. I think it probably needs to go a little bit lower. At one point, I was talking something with a 16 handle, but um,
Yeah,
like you say, if you're inclined to be a buyer, averaging in is the smart play. But if we go back down and take out the support a little bit more convincingly, I could see 1740 pretty easily, I think.
okay.
And then, like I said,
Well, I
maybe
think we
1700.
also shouldn't ignore the fact that we saw some pretty good numbers going into India as far as gold goes this
Yeah,
week. So,
there.
the old player that really was number one for a while and then kind of slipped behind and fell into the number two slot. It's nice to see him back in the game, you
Yeah,
know?
we continue to see signs of improved demand
Hmm.
in China and India, but they're not exactly piling back into the market, at
No,
least not
no,
yet.
that's true. But like you said, we drift a little lower. I think we'll see some interest.
Yeah. So we had some interesting data this week with regards to inflation. I'm
Uh-huh.
specifically talking about PPI, which came in. Expectations were 0.4%. It came in at plus 1.3.
Surprised the heck out of everybody too.
Out of
It's just
everybody.
there were a lot of people, a lot of mouths open at that point.
The annualized rate of PPI more than doubled from
Yep.
0.8% year over year in December to 1.7% year over year in January.
Uh,
Core PPI, ex food and energy,
yeah.
1.2% on expectations of 0.2%. And again, that drove the year over year rate of core PPI up to 2.0%. So, holy cow, the inflation that you and I have been talking about for weeks and weeks with
Yes.
regards to input prices,
Yes.
uh, copper and energy and, rolled steel and
Just
tin
groceries,
and,
man. I mean, we're
well,
just
yeah, but at the producer,
gasoline at
yeah.
the pump. I mean, the middle class is getting crushed right now.
So market PMI came out on Friday, and the highlight of it was their comments on inflation. This is from the PMI, the market PMI report. Substantial price increases for inputs led to the fastest rise in cost burden since data collection began in October of 2009.
Wow.
The second fastest on the rate of change inflation, the second fastest on record. The rate of input cost inflation was the sharpest since April of 2011.
Yeah.
So again, all of
Getting that
these,
money, baby.
it's manifesting at the wholesaler level, the producer
Yep.
level, and when that happens, what's the next step? You pass
It
those
has to go
costs
to the
along.
retailers. They got to pass it along.
You
That's
betcha.
it. You
So it'll
betcha.
start
Yeah.
it'll start manifesting in CPI, and we'll also see it eventually in the PCE chain price index, which is the what the Fed watches. We'll actually get that report this week, late in the week,
Oh, okay.
and expectations I think are running at 0.3% for PCE chain price.
Oh, yeah.
This might be a
That's gonna
surprise
be
too.
that's gonna
Yep.
be interesting. Yeah.
Yeah.
I mean, it's not to the point where it's gonna hit durable goods on the next report, but the one after, I think,
Yeah.
is
Yeah.
gonna
It
be
might it
some
might be
mouths
another
hanging
month or
open.
two before
Yeah.
we start feeling it at the
Yeah.
consumer level. More than we already are, right? Because
Yep.
we've talked about that too. Food prices, energy prices,
And
housing.
oh yeah.
Um,
And I mean, and then of course on top of everything, people are people are getting these monstrous energy bills. I mean, really, and that the poor are the most just devastated by this, because some. I mean, you have to think about whether you're going to eat or heat your house. I mean, I don't want that decision, and that a lot of people are making that right now.
I agree. I
Yeah,
agree.
yeah.
Well, the last thing on gold I wanted to mention is
Ah,
the World Gold Council came out with kind of their gold
Good
as a
source.
strategic investment report.
Right.
And specifically with regard, there's a lot of great data in there. The bottom line is that a well-diversified portfolio with a gold component
Hmm.
performs better than a portfolio
I saw
without.
that.
But specifically with regards to inflation, so the average annual return over the last 50 years in gold has been 11%. In high inflation environments,
Yeah.
where inflation is 3% or greater,
Uh-huh.
15% annual
I didn't
return.
realize it was that high. That's a big
Yeah,
number. I'm glad you mentioned that. And by the way, World Gold Council is really a good source for you guys that are looking for a good read. They always put out some very strong,
their stuff is
confident
free.
information.
Just subscribe. Put your
Yeah,
email address in.
bang,
It's
and
great. And
you're
they're
there.
also on all the social media channels, so they're awesome.
They do a nice
Um,
job. Hey, listen, let's move into silver because we
yeah,
saw
let's.
an SLV. That's a big number to be coming out.
Yeah, yeah. It was kind of a record inflow during the big
Yep.
uh,
During the rally.
Reddit thing, and
Yeah.
then
Bang.
almost a record outflow
Yeah.
like 2 days later.
Yeah. Yeah.
So
Yeah. It's
it's
interesting,
been
but he did say he was sorry when he was being questioned by Congress. So I feel better about
yeah.
that,
So silver ended up down 0.3% last week.
which
Kind of
isn't bad
still,
considering everything going on,
yeah,
right?
yeah,
Yeah.
kind of range bound at this point. The midpoint of that of the range is right around $26. So I think if we, or I'm sorry, right around $28. 27 high 27s 27.98 I think it is. If we get back above 28, I'm still feeling pretty good about a retest of $30.
Hey, look
um,
at one of the best metals traders out there, JP Morgan added, I believe it was 5 million ounces to their holdings. So somebody out there who stepped up to the table and it was in a big way.
yeah, ongoing weakness in the gold silver ratio I think is another encouragement to the bullish scenario.
That's a
And then,
good, it's a good thought.
you mentioned SLV specifically.
Yes, absolutely.
BlackRock, who manages that,
Yes,
put some new verbiage in their disclosure documents
I saw that.
about may having to suspend or restrict issuance moving forward. So
Yep,
all this money, all this silver's flowing out of the
yep.
SLV, and BlackRock is obviously very concerned about, if interest picks up again, that where are you going to get the silver?
Where are you gonna find the product? Yeah,
Yeah,
and I quite frankly wondered why that hadn't been in there a year ago, because at some point with when we get into deficit mining, which we've been in for about 4 or 5 months, with COVID, and we start ending up with the shortages that we have now. I mean, they're going to end up in a bad situation. So a little slow to respond, but big ships take longer to turn.
yeah. So
Yeah.
there may be a point down the road where it's, hey, no SLV for you.
Yeah. No delivery, sir. Yes. Yeah.
All
It's
right.
yeah. So we'll
Um,
see.
yeah. So and obviously the premiums remain high on the physical product
They
as
are
well.
because you know what, guys? Remember, we're still seeing lots of shortages. We're really killing ourselves to get you guys metal. Pete's, handles our deliveries out of our Denver office. He runs it and does an extraordinary job. And he's been killing himself all week to get product out, and he's catching up. So things are good, man.
Yeah, yeah, we do have availability on products, but
Right.
as I mentioned, it's higher premium. Here's the
Yeah.
trade-off, the remedy for higher premiums is what? It's higher prices.
Yeah.
So
Always is.
in a high premium environment, it is reflecting the realities of supply and demand. That supply is tight, demand is strong, but the underlying price of silver, spot price of silver, is not reflecting that reality. And so the only way to compensate for it is to raise the premiums. When the price goes up, when the underlying spot price of silver goes up, we'll see some premium relief. But it becomes a question of, pay me now or pay me later, right?
Yeah. It's when. It's when, and I think
Yeah.
that was a good explanation. And a lot of people get a little bit confused by that. But premium has still been strong. And you know what? On a lot of the gold items too, the premium really hasn't dropped that much either. So don't be scratching your head, guys, because the physical demand versus the futures and versus the SLV has been greater. And the twain does meet at some point. We'll see it. We'll see it calm down a bit.
Yeah, averaging in is still the
Yep,
best strategy,
absolutely.
regardless of price, underlying price, and regardless of premium, I think.
Yep.
Platinum,
Ah,
another great week for platinum, up
PGMs have been rocking.
1.8% last week. It was the third consecutive higher weekly close. We set a 6.5-year high at 1337.30. So we blew through my measuring objective. We blew through
By
the
a mile.
Fibonacci level.
Yep.
And the next Fibonacci level I'm looking at is 1428.5,
Well,
which,
let me help you with this. As you know, I have friends in Switzerland, and we talked to them. I just got off the phone with them an hour ago, and we are exports out of Switzerland of platinum was up 83% month on month.
I
Um,
believe it.
that's a big number. I mean, that's a big number.
Yeah,
And
and I bet they're
Swiss
still not
sales
keeping up with
are,
demand.
yeah, you just can't. And oh, by the way, India came in and jacked up a bit, and they were up like 7.2%. So, I mean, we're seeing buyers coming out of the woodwork for PGMs, and China is swallowing up any loose platinum that is out there. So we aren't done yet, Pete. I think your Fibonacci numbers have some great validity here.
Yeah, we're seeing some volatility up here, but
Yeah.
that's not surprising. So while the
No.
market is a little bit overextended, I'd be happy with kind of a sustained corrective pullback, or at least a period of
Well,
consolidation before we head higher. That would set us up, I think, pretty well for that next
Would allow us
Fibonacci
to buy a
objective.
heck of a lot more for the next run. Is what it
Yeah,
would do.
yeah. So Palladium,
Yep.
same as it ever was. It was down 0.4% last week. Still largely range bound, and
2,400's the big number, right?
yeah, I
Yeah.
remain kind of generally positive based on the supply deficit and expectations for ongoing demand as the auto industry comes back. Obviously, a lot of focus has switched to electric vehicles and
Sure.
even hydrogen fuel cell technology, but there's
It's being
still
recognized
a
everywhere.
lot of internal combustion cars, conventional cars, are still going to be sold in the
Oh
decade
gosh,
ahead.
yeah. I mean, look at how well the new Green Deal worked in Texas. Tell that to the families standing around their in-laws that they're burying right now. I mean, there has to be a gradual step into it. But I mean, in the reality is, for example, Ivanhoe Mines just stepped in, and Ivanhoe's a big investor, and they came in and put 240 million into a palladium mine this week. So we're seeing some big numbers flying around from producers,
Yep.
and so this thing isn't over.
Yeah. Speaking of not over, how about
Hmm.
that rally in copper?
Copper calls, huh?
Hey,
Let's talk about Pete's number. What was it?
$4, baby.
That's it, and
Four
man,
bucks
wait.
is in the rearview mirror.
Yeah, I was just gonna say that's behind the bus now, man. I mean, we are rocking. We hit what 406, and it was like going, I kind of
Almost
like it up here,
409. Yeah.
Yeah,
So last week, copper was up almost 7%.
yeah.
Third consecutive higher weekly close, 408.96, 9.5-year high.
And let me tell you something, Citibank, who has lately been coming to the table on copper, maybe the last 3, 4 months, we've been seeing some of their analysts coming up with some numbers. They said that we're 500,000 tons in deficit for against demand for this year. I put my glasses back on again, and I went, what? And they're saying we're going to 10.
Holy moly.
And I was stunned. So the guys at Citi are really stepping up, and boy, I've never heard a more bullish horn blown in my life. And but let's see if they're right. I mean,
Well, I was going to
it's a
ask
big
what the next
number.
upside target
China
is.
just keeps buying coal. What?
I was going to ask what the next
China
upside
keeps
target
buying
was because
coal, and they are manufacturing as much copper as they can. So the demand is overseas is as strong as ever, and the furnaces are running.
yeah, and I think you mentioned within the last couple of weeks that actually Chinese demand has actually slowed down a little bit for copper, but the rest of the world is picking up, and it's totally offsetting, any dip in Chinese demand. So I think that the market still looks really strong. I was going to suggest $5 as the next logical upside objective, but if
Wow.
Goldman wants to go for 10,
Yeah, let them.
let him.
Let him. But that city, we don't want to misquote Goldman. Goldman said there's a shortage. He put a warning out Thursday, but city's calling for the 10. So
Gotcha.
so
Sorry
the
about
big
that.
players are, I mean, they're all standing in a line, bullish as heck. So, and obviously talking their position, but
Yeah. Well, overall, the bet is largely on economic recovery, stimulus
mhm,
with an emphasis on infrastructure and also
yeah,
electric
absolutely.
and green technology. So that
Yep.
that bodes well, not just for copper, but for silver and platinum and palladium as well.
Well,
Um,
here's another thing, Pete. We always on this show have always tried to be in the forefront of science, whether it's medicine, whether it's construct, whatever it happens to be with metals and metals that we offer the hedging platform for a tornado at Zaner when we, mitigate risk for our customers. But the thing is, the Russians came out with a way to add a salted copper spray onto coal, which reduces the CO2 gas on the net burn by 40%. A brand new use for copper. They're burning it up, it's turning it into an ash, so they're destroying it. But the net result is 40% less pollution for coal. That's staggering when you consider that 30% of the world uses coal to heat. So, and also to fire their furnaces. So that, I mean, that we thought I would announce that here because we kind of were the first people to come out with the hydrogen usage. And now I think we should mention the copper salts because it could be a real game changer.
It could be a game changer,
Yep,
particularly in the developing world where they are still
absolutely.
very heavily dependent on coal. I
Oh
don't
yeah.
I don't see any circumstance where first world is going to backslide into coal use, but
No,
um,
no.
but
But I'm
certainly,
just saying, I think that's just a phenomenal discovery, and it was just announced this week, and I thought I should
yeah,
mention.
we'll keep an eyeball on that.
Yeah, absolutely.
It's also worth mentioning this past week the retail sales number was giganormous. Um,
Well, they're like you said, it's confidence, correct, sir?
Yeah. So January retail sales came in at plus 5.3%.
Blew the experts right off of the table.
Those experts were expecting 0.9%.
I know.
Yeah. X Auto was up 5.9%, also on expectations of plus 0.9. So again, the consumers, maybe they're front running the inflation. Get your purchases in now before the prices go up.
I don't know,
Um,
man. I just keep looking at the Amazon stock going, man. I mean, we know what's driving this. People are those fingers are clicking.
Yep. Yep. Industrial production was a beat last week too, up 0.9% on
Thought that was
expectations of
interesting.
plus 0.4.
Yeah,
PPI we already talked about.
right.
Export prices
Yeah,
sharply higher, up 2.5% on
that's a
expectations of
beat.
plus 0.6.
Yeah,
Import prices were a beat as well, plus 1.4%. So again, the inflation theme and inflation expectations are on the rise. This week we'll have more housing data out, consumer confidence. We've got durable goods orders.
yeah.
Expectations are
All big
plus,
stuff next week.
yeah,
Big stuff
1.0.
next week.
Um, Q4 GDP, the second report, a little bit of an uptick is what they're expecting, plus 4.1%. And then PCE comes out at the end of the week, plus 2.2% on PCE. But the chain price index, which is what the Fed watches,
Yeah,
0.4% is what they're expecting. So
we'll
we'll
see,
see.
huh?
Yeah, we'll
Yeah,
see if it's
yeah.
if we
But
start seeing that in the
we hate to
numbers.
hit you with all these numbers, guys, but it's real important for our consumers, all of our guys, from everything from our hedgers to our miners to especially our scrappers, that we give you as much of the facts as we can. Because, like I said, we're not here to make predictions for you to trade. We're trying to give you the underlying basis of what's going on in the metals. And I think that what Pete has been putting out here is very, very critical.
Yeah. So for information on our hedging platform, tornadobullion.com is the place to go for that. And I'll make
Yep.
sure that's in the post-production notes.
Oh, terrific.
And for retail clients and wholesale clients looking for physical metal, zanerpreciousmetals.com is
We're
the place to
battling to
go.
keep it here, guys. We're not, when you go to buy your metals at other places, look underneath and you'll see 10 weeks for delivery. We're getting it out, as soon as the money's clearing here. So,
Yep.
if you want it in your hand in a week or you want it in your hand in a couple of 2, maybe 3 months, be careful where you're shopping.
Right on.
Yeah.
Well, with that, I think we covered everything, Pete. So
Thank you.
for everybody here at Zaner, we appreciate you. Give
Yeah,
us a
you bet.
like, give us a follow.
Yeah.
I'm Peter Grant with Zaner Metals in Denver. Make it a great week.
Pete Thomas, I'm going to go back out and shovel now. Nice seeing you all.